Warren Buffett once said something that completely changes how you think about investing. He said, widespread fear is your friend as an investor because it serves up bargain purchases. Now, think about that for a moment. While everyone else is panicking, selling their shares, and running for the hills, that's precisely when the real opportunities emerge. Whether we're talking about socks or stocks, Buffett loves buying quality merchandise when it's marked down. It's really that simple. The best thing that can happen to you as an investor? A great company hitting a temporary rough patch. That's when you want to buy them, when they're on the operating table, so to speak. But here's the thing. Most people get completely backwards. They start paying attention to shares when everyone else is paying attention. When there's buzz, when there's excitement, when your mate at the pub is giving you hot tips. But the time you should really be interested is when nobody else is interested. You simply cannot buy what's popular and expect to do well. It doesn't work that way. The most common reason for low prices is pessimism. Sometimes it's specific to one company, sometimes it sweeps across an entire sector. And, mate, that's exactly the environment where we want to be operating. Not because we love pessimism for its own sake, but because we absolutely love the prices it produces. Buffett and Charlie Munger learned something crucial after buying and managing a wide variety of businesses over 25 years. They didn't learn how to solve every business problem that came their way. What they learned was how to avoid those problems in the first place. And that's a completely different skill set. Speculation is most dangerous when it looks easiest. Think about that. When everyone's making money, when it seems like you can't possibly lose, that's when you're in the most danger. Buffett's advice? Keep things simple. Don't swing for the fences on every pitch. When someone promises you quick profits, respond with a quick no. Here's a fascinating bit of probability for you. If you get a bunch of people flipping coins, half of them will win on their first toss. But none of those winners, not a single one, has any expectation of profit if they keep playing the game. The market works the same way. Just because you got lucky once doesn't mean you've got a system. When opportunities come your way, you do something about them. Buffett describes his career as having long, dry periods punctuated by moments when ideas just flooded in. He says, if an idea comes to me next week, I'll do something. If it doesn't, I'll do nothing. And that's perfectly fine. Now here's something that'll make you laugh. Buffett says, if playing the money game only required knowing history, the richest people would be librarians. You can't profit from yesterday's growth. The investor of today doesn't make money from what happened in the past. The lesson we learn from history? People don't learn from history. We keep making the same mistakes over and over again. Money isn't everything, but Buffett adds with a wink. Make sure you earn plenty before you start spouting that sort of rubbish. Right now, people holding cash feel comfortable, but they shouldn't. They've chosen to hold a terrible long-term asset that has virtually no return and is guaranteed to decline in value. Inflation eats away at it year after year. When you read a headline saying, investors losing as market falls, you should smile. Correct it in your mind to read, non-investors losing as market falls, but investors are winning. Because while the financial press often forgets this simple truth, for every seller there's a buyer. And what hurts one person necessarily helps another. The point isn't to predict the rain. The point is to build the ark. Forget trying to time the market perfectly. Forget trying to predict exactly when things will go up or down. Focus on building something solid that can weather any storm. The years ahead will feature major market drops, maybe even full-blown panics, that'll affect nearly every stock at some point. No one can tell you exactly when these traumas will occur. But here's what Buffett knows for certain. The best time to deploy capital is when things are going poorly. A climate of fear is the real investor's best friend. People only pay heavily for meaningless reassurance when commentators are optimistic. That's when investing becomes expensive. When Buffett looks at the billionaires he knows, he notices something interesting. Money just brings out the basic characteristics that were already there. If they were idiots before they had money, they're idiots with $1 billion. The money doesn't change who you fundamentally are. He's understanding if you lose money for the company. But if you lose a shred of the company's reputation, he becomes ruthless. Because reputation is everything, and it takes decades to build, but moments to destroy. By the time you reach his age, Buffett says, you'll measure your success in life by how many people you want to love you actually do love you. That's the real scoreboard, not your bank balance, not your investment returns. How many people whose opinion you care about genuinely care about you in return? Buffett always knew he'd be rich. He doesn't think he doubted it for a single moment. But here's his secret. You only need to do very few things right in your life, so long as you don't do too many things wrong. It's about avoiding big mistakes more than hitting home runs every time. Honesty is an expensive gift. Don't expect it from cheap people. That's not cynicism. That's just reality. People who cut corners in character will cut corners everywhere. Wall Street, Buffett observes, is the only place where people who ride in Rolls Royces take advice from people who catch the train. Think about that dynamic for a second. Who's really got it figured out? Imagine you've got a car, and it's the only car you'll ever have for your entire life. You'd take extraordinary care of it, wouldn't you? You'd read the manual 5 times. You'd keep it garaged. The tiniest scratch or dent, you'd fix immediately because you wouldn't want it rusting. You'd baby that car. Now here's the reality. You've only got one mind and one body, and they've got to last a lifetime. It's easy to let them coast for years, but if you don't take care of that mind and body, they'll be a complete wreck 40 years from now. What you do right now, today, determines how your mind and body operate 10, 20, 30 years down the track. If you're in the luckiest 1% of humanity, you owe it to the other 99% to think about them. The rest of humanity deserves that from you. Success brings responsibility. The difference between successful people and really successful people? Really successful people say no to almost everything. You've got to maintain control of your time. And you can't do that unless you learn to say no. Don't let people set your life's agenda for you. The most successful people in business are those doing what they love. You don't need to do extraordinary things to get extraordinary results. Just consistently do the ordinary things well. Buffett says, "Tell me who your heroes are, and I'll tell you who you'll become." Choosing the right heroes was one of the best things he ever did. Your heroes shape your trajectory more than almost anything else. Investors must remember that excitement and expenses are their enemies. The most important investment you can make is in yourself. That's the one that pays the highest returns, always. Buffett insists on spending an enormous amount of time every single day just sitting and thinking. This is incredibly uncommon in business anywhere, let alone in fast-paced environments. He reads and thinks, so he does more reading and thinking and makes fewer impulsive decisions than most people in business. He tells students, read 500 pages like this every day. Hold up a stack of reports and papers. That's how knowledge works. It builds up like compound interest. All of you can do it, but he guarantees not many of you will actually do it. The way humans best prepare for their economic future is by investing in their own education. If you work hard and learn when you're young, you'll have the best possible conditions for securing your future. Buffett had great teachers in life, but professionally, he had someone like Abraham, another great teacher who laid the right foundation at a very early age. And then he basically didn't listen to anyone else. Every morning, he looked in the mirror, and the mirror always agreed with him. He goes out and does what he believes needs to be done. He doesn't get swayed by what others think. That's the kind of conviction that builds lasting success. These principles aren't complicated. Buy when others are fearful. Invest in quality. Be patient. Keep learning. Protect your reputation. Say no to distractions. Take care of yourself. Choose good heroes. The brilliance of Buffett's approach isn't that it's complex or requires genius-level intelligence. It's brilliant because it's simple enough that anyone can understand it, but difficult enough that most people won't actually do it. The question isn't whether you understand these principles. The question is whether you'll have the discipline to apply them when everyone around you is doing the opposite. When fear grips the market, will you buy? When euphoria pushes prices to absurd levels, will you wait? That's what separates the investors from the speculators. That's what separates temporary success from generational wealth. The tools are here. The principles are clear. What you do with them is entirely up to you.